The banking sector in Pakistan had a strong year in 2024, but faced some challenges as well. Banks performed better than the stock market, with their value increasing by 87% compared to last year. High interest rates helped banks earn more money early in the year, but later, as interest rates were cut, profits started shrinking. The government increased taxes on banks, which took away a big chunk of their earnings. People put more money in banks, and total deposits reached peak air 30.3 trillion, an 8.8% increase. Banks also gave out more loans, 29.6% more than before. Apart from loans, banks made money from transaction fees and investment profits, which grew by 14%. Since inflation was lower this year, banks didn't have to spend too much on operating expenses, keeping costs under control. Overall, profits of banks fell by 3% this year. The last quarter was worse, with a 26% drop in profits compared to the same period last year. Higher taxes and lower investment returns were the biggest reasons for this drop. Some banks did well, while others struggled. MCB and HBL saw their earnings fall, while UBL and MEBL managed to grow. Dividends remain stable for most banks, meaning they are still paying out decent returns to shareholders. Interest rates have come down, which is good for businesses, but not great for banks. Higher taxes will continue to affect profits. Despite this, banks are still strong and have enough money to pay dividends. The National Bank of Pakistan might start giving dividends again after a long gap. The banking sector had a good year overall, but is now facing difficulties due to lower interest rates and higher taxes. However, banks remain strong and continue to reward their investors with dividends.